One of the main incentives for buying an electric vehicle, EV, in the U.S. is the federal tax credit of up to $7,500 that can reduce the cost of ownership. However, not all EVs qualify for the full amount, and some popular brands such as Kia, Hyundai, Rivian, and Lucid do not qualify at all due to their foreign production, high price, or battery sourcing. The EV tax credit is based on several factors, including the battery capacity of the vehicle, the manufacturer's sales volume in the U.S., and the final assembly location of the vehicle. According to the Internal Revenue Service, IRS, a vehicle must have a battery capacity of at least 7 kilowatt-hour, to be eligible for a base credit of $2,500, plus an additional $417 for each kilowatt-hour of capacity over 5 kilowatt-hours, up to a maximum of $7,500. The vehicle must also have a gross vehicle weight rating of less than 14,000 pounds and be made by a manufacturer that hasn't sold more than 200,000 EVs in the U.S. For vehicles purchased after August 16, 2022, the vehicle must also undergo final assembly in North America. For vehicles purchased in 2023 or after, the vehicle must also meet new critical mineral and battery component requirements to qualify for the credit. These criteria exclude some of the most anticipated EVs from the tax credit program. For example, Kia and Hyundai are both South Korean manufacturers that have exceeded the 200,000 sales limit in the U.S., so their EV models such as the Kia Soul EV, Kia Niro EV, Hyundai Kona Electric, and Hyundai Ioniq Electric are no longer eligible for any credit. Rivian and Lucid are both American manufacturers that have not yet sold any EVs in the U.S., but their upcoming models such as the Rivian R1T pickup truck, Rivian R1S SUV, and Lucid Air sedan are expected to be priced above $70,000, which would make them ineligible for the credit under the new income limits that apply from 2023 onwards. A maximum of $300,000 for a household, $150,000 for an individual, or $225,000 for a head of household. Additionally, Rivian and Lucid may not meet the new critical mineral and battery component requirements that apply from April 18, 2023 onwards, depending on where they source their batteries and materials from. The EV tax credit is designed to encourage consumers to switch to cleaner vehicles and reduce greenhouse gas emissions. However, some critics argue that it is unfair and inefficient to exclude some of the most innovative and competitive EVs from the program based on arbitrary criteria. They suggest that the tax credit should be based on environmental performance rather than production location or income level. They also point out that some of the eligible EVs such as Tesla and Volkswagen models are already selling well without the tax credit due to their high demand and brand recognition. Therefore, they propose that the tax credit should be reformed or replaced with a more effective policy that can accelerate the adoption of EVs across all segments of the market. The Inflation Reduction Act of 2022 was supposed to encourage more Americans to buy electric vehicles made in the U.S. with domestic materials. But it also created a loophole that allows EVs produced outside North America to qualify for the tax credit if they are leased by a business or a financial arm of an automaker and the savings are passed on to the consumers. This loophole is based on a provision that extends the credit to commercial vehicles, which have less strict requirements than personal vehicles. A commercial vehicle can be any electric or fuel cell vehicle under 14,000 pounds with a battery capacity of at least 7 kilowatt-hours. It does not matter where the vehicle or its components are manufactured or how much it costs. This means that many popular EVs that do not qualify for the credit if purchased by a consumer can still benefit from it if they are leased. For example, the Kia Niro EV, which is made in South Korea and Indonesia, does not qualify for the credit if bought by an individual. But if it is leased by Kia Motors Finance, the company can claim the credit and lower the monthly payments for the lessee. Similarly, luxury EVs like the Lucid Air, which are above the price cap of $55,000 for personal vehicles, can also take advantage of the loophole if they are leased by Lucid Financial Services. The company can apply for the credit and offer an automatic $7,500 savings to the customers who lease any Lucid Air model. This loophole gives automakers an incentive to increase EV leasing and boost sales. It also gives consumers an opportunity to save money and drive more affordable and environmentally friendly vehicles. However, some critics argue that this loophole undermines the original intent of the tax credit and gives an unfair advantage to foreign or expensive EVs over domestic or cheaper ones.